timingresearch.com crowd forecast news for December 12th, 2022. We are recording this at 1 p.m. Eastern, and this is episode number 340. My name is David Kosmeter. I'm the creator of timingresearch.com, and you should be seeing my screen right now. And today I have arranged for Casey Stubbs, Michael Katz, Dan Passarelli to join us as the guest for today, and the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. Thank you, David. And thanks everybody for being here. We got a very big week of news hitting the fan here, so we'll have to see how things pan out. Before we get started, let's introduce everybody so we know who's speaking, and then we'll get right into it. Casey, could you start out by letting us know a little bit about yourself and a little bit about your firm? Sounds good. Hey, Michael, yourself and the firm?
Yeah, hey guys, I'm Michael. I'm the CEO of Trade a Pool. We are an online prop firm that fund stock day traders. Other than that, I've been day trading myself for the last 15 years, mostly stocks and indices.
Okay, sounds great. We'd like to hear more about your methodology as we get into this a little bit. And Dan, again, a quick introduction and a little bit about your firm.
Yeah, hey folks, my name's Dan Passarelli, been in options for 30 years, holy moly. And I'm the founder and president of markettaker.com, which is among the leaders in option trader education.
Sounds great. And of course, there's a lot going on with the options. We'll talk about that as well. Before we get started, on Monday, we always give you the question of the day, which is, where do you think the market will be on Friday, basis where we started the week? And we started the week, it looks like at 39.35 or 39.33 ballpark on the SPX. And so from 39.35, and then on Friday, what a week to try to predict, huh? Where do you think we're going to close on Friday? And higher, lower, and what's your conviction? You know, is it 80% chance or 55 or whatever? So let's start out with Casey. Casey, we're at 39.35 on the opening. You're 20 points to the good if you think it's going up, but what do you think by Friday?
Okay, well, thank you. So I was actually fortunate enough to be here last week, and last week I was thinking that we were going to be under 4,000, and I was right. So hopefully I get some props for that.
Exactly.
But props doesn't really make money, right? You could guess all day long, and if you're not trading it, it doesn't matter. Right. But that's really tough. One right now, if you look at it, we're in a channel, right? On the daily, it's pretty tight, right up against that moving average there. It looks like a 50, really tight. We're in a tight range, and so I think it's waiting for the data. The market's waiting for the data, which is coming out. So tomorrow we have the CPI. It's going to be very important. We also have FOMC. So to be able to make an analysis on that, here's what I'll say is I'm going to think that we're going to be below 3,900. I think that the news is going to push this thing lower. However, on the chance, like the percentage, I really don't know. I mean, obviously, but I'm going to say that there's a 40% chance that I'm right.
Yeah, there's too much news. There's too much news out there for you to be slamming the table on anything, right?
You're right. It's really going to based off the news. But what I'm anticipating is we might have some numbers that are going to say that inflation isn't going away as fast as what they hope. And so we're going to see that push us down below 39. That's kind of what I'm looking at.
Okay. Michael, what's your best guess on between now and Friday with a 39.35 starting point?
Yeah, I guess so. So again, there are a lot of news coming, so it could be anywhere, but I guess we could continue to the downside, probably to the 39 area, 3,900 on the S&P. I'm looking also, maybe we'll talk about it later, but I'm looking also at the VIX, the VX, and it's looking pretty good to the upside. So
yeah.
it makes sense.
Yeah, that 18, 19 is in the rearview mirror now, huh?
Yeah.
Yeah. Okay. And what are you thinking here, Dan, as far as the market? And, just opine a little bit about what you think the VIX might be telling us.
Yeah, boy, I'll tell you what, before Casey started talking, I was like, oh yeah, I think we'll be below 39. And so, geez Louise, I hate to like be so agreeable here, but yeah, I mean, I think we're going to be below 3,900 as well. And I think that because there's been so much attention focused on Wednesday, like tomorrow's number, CPI expected at 7.7. There's
I
so
thought
much.
I thought the expected number was 7.3. Last time the number was 7.7. Isn't that? Or what are you hearing?
I don't know. I came across I mean, I guess it depends on, who
You read. Yeah, I was listening to Bloomberg.
Oh, okay. Yeah, but either way, whatever it is.
Yeah, it's supposed to be a little bit down, right?
Yeah. But, like I wouldn't be surprised if we rally a little bit after the number or sell off, whatever. But then the focus shifts and, it's not such a rosy picture. So, yeah, I'd say below 3,900. And I would say 55% conviction.
Mm-hmm. We got a little bit of runway between this meeting on Wednesday and the next Fed meeting. It's already going to be like almost February 1st, the next time they meet. So that's a pretty good gap between Fed meetings. And it'll be interesting to see what they say here after the statement. You know what I mean? Casey, do you have any opinion on what you think they might put in the statement? Are they going to be kind of dovish and then let this Santa Claus rally January effect happen? Because, generally you get a rally, in December, and you generally get a rally in January with that January effect. How do you feel the statement might tilt people?
That is a great question, and I honestly can't give an answer to that. It's really hard to say. I've enjoyed listening to the statements the last couple times. Last time they were pretty heavy-handed, and Jerome Powell said that he was going to basically do whatever it takes to fight inflation, and was very strong about that. And then following his following statements, which were on November 30th, he kind of softened a little bit. He still was very resolute to stand firm. However, he said, you know what, if we see data that shows that things are stabling off, or that we can slow down rates, we'll do that. So as far as what he's going to say, I don't know, or how they're going to word it, I don't know. But I do know that they're pretty determined to fight against inflation. And so if they feel like it's not going as well as they're hoping, they're going to be very strong and firm, and they're willing to go through a little bit of a downturn in order to accomplish their objectives.
Yeah. Everyone keeps talking about this downturn. You go out to every restaurant, every mall, everywhere, and everyone is out there just spending like madmen. So I don't know what this downturn stuff is all about. I mean, on this prediction stuff, if you look at last year, their prediction was like Fed funds might go up to like 1.5 or 2%, and look where we are. So maybe the prediction game's a rough racket,
Yeah. Predictions are definitely a tough game to be in, for sure. And you're right. The things are looking great. They feel good right now. I do think that that's a good thing, though, that Powell's wanting to keep inflation under control. Obviously, wage inflation's pretty good. We want to see people making more money, but it's not keeping up with some of the cost of goods. And, if that keeps going, definitely will cause the squeeze to people.
Yeah. Let's talk about fundamental or technical indicators, because you guys all use your own things. What technical or fundamental indicators are you looking at that you think might really affect the S&P 500 looking forward here? Michael, you're doing a lot of short-term trading. So what are you kind of looking at there? Maybe you could open the door to your methodology at the same time,
Yeah, no problem. First, usually I look at the naked chart, mostly like the price action.
You
Yeah.
want to share something, Michael?
Yeah.
You know, share
Yeah,
your
yeah,
screen
why not?
there and give us an idea of what you're looking at, because otherwise we're going to leave a lot to the imagination. You know what I mean?
All righty. Yeah, okay. So just let me know if you
Yep,
see my
you got
screen.
it. You're
Okay,
up.
cool.
Yep, we got about 6 screens up there.
Yeah, so basically, like maybe we will talk about it later to the day trading part, but if we're looking at the big picture, I usually look at the 4H on the S&P and the NQ, and always looking at the VIX as well. So most of the time I'm just watching a naked chart, just mark my my levels. The only indicators that I do use is the 200 EMA and the 420 EMA as well. I know maybe not a lot of traders use that, but I found it to be very accurate. You can see it right here. That's the light blue. And I got at the bottom the MACD just for deviations. So, but mostly, like as you can see, just marking levels. So if I'm going back, you can see that we've been trading in a nice channel, a downtrend channel, trying to break through that level. But it's anyone's game at the moment because we're moving sideways for the last month. The news that will come this week will push the price up or down, and we can't really tell. Full disclosure, I'm long on the NQ. Usually, if I trade indices, it's usually the NQ and not the S&P.
Right.
But I'm long here, so so all the way from before the news, the last news that we got in this bar. So basically, just waiting for it.
And where would you reverse yourself?
Getting out of the position, you mean?
Get out, or maybe reverse your position.
I usually want to reverse it too fast, so I'll close it and then reassess and then start a new position.
Right.
But basically, breaking down after the news, like at least the FOMC news, so breaking down and closing below the 11,400.
That would be a cue that things are going south.
Yeah, definitely.
Yeah. Anything else you're looking at when you do this? Or can you explain a little bit? What are you looking at the bottom? Some kind of a MACD? Is that just a incidental information, or do you use that quite a bit?
I use that, but I use the chart first, like the price first, and then just adding a little bit of the MACD to the picture. Basically looking for a divergence, at the bottom or the top. Usually for that, I'm using the 1H just to see some negative, negative picture between the chart and like the price and the MACD. For example, right now, we just tested the high, the MACD creating new lower highs. So getting this bearish feeling at this moment.
And when you're doing the short-term trading, what time chart do you tend to gravitate to?
A 1 minute. Yeah, I'm all about the 1 minute chart.
Yeah. So obviously that's so that means you're pretty actively trading then, right?
Yeah, very. As a CEO of Tradepool these days, probably a little bit less than what I used to, but still just moving meetings and all of that, just so I will have at least the first hour to trade.
Yeah.
So yeah.
And and the NASDAQ E-mini is pretty much your main game in town, or do you trade any of the other ones?
No, I mostly trade stocks.
Individual? You mean individual issues?
Yeah.
I got you. Do you have a few that you're looking at now that you might want to share with us?
Yeah. So I traded actually the Qs, the QQQ.
Okay, sure. Yeah, that's what a lot of people do trade. Yeah.
Yeah, because this time of the year you got so much volatility, then you can easily trade just the ETFs, the SPY and the Qs, maybe the IWM. But in any other days, you just go through the scanners and find stocks in play, basically. Lots of volume, news that covering. We had a few of those today. So today, when it started to sell off, I just led the pre-market. So we started to sell off right at the beginning, reached a support level, the pre-market basically, or actually yesterday area right here when it actually broke the aftermarket and the yesterday close. But you can see that the MACD is dropping below the 0.2. Most of the times when it's extended like that, you will see a bounce. And basically after that, I just bought it right at the bottom and sold right at the top. I have it. I can show it to you on my.
Yeah, I heard a good statistic, not a good, interesting one on NASDAQ. It has now been underneath its 200-day moving average for the longest amount of time since the .com crash, which is 173 days. So for 173 days, the NASDAQ has been under the 200-day average, which I thought was, obviously, it's a pretty historic number, huh?
Yeah, it's crazy. And
I mean, yeah, they're draining reserves. So asset prices have a difficult time going up when they're draining reserves, right?
Yeah, exactly. And we'll see how it goes in 2023, but
exactly. Yeah, they change
a lot ahead of us.
Yeah.
So that's what, just to show you, that was the trade that I made. So that was the sell-off, buying at the bottom, trying to sell at the top when reaching a resistance level. So pretty much very active and kind of fast entry and execution and exiting.
Any of these new stocks hit your radar? Like Microsoft bought 4% of the London Stock Exchange, and of course Horizon and Amgen had a little bit of a deal, and Coupa, C-O-U-P-A, they had a suitor that popped that stock quite a bit. Any of those things hit your radar? Or?
Yeah, I mean, I usually don't trade like small caps, but there are a lot of those popping up. HARP, for example, today made crazy move, like 90%, even more than that, just going from 1.4 to all the way to 335. But you did have Qualcomm, QCOM, that opened with a gap down. It was after, if I'm not mistaken, a downgrade, and reached a support level and bounced up. I didn't trade that, but if I'm not mistaken, it was a downgrade, by Wells Fargo, and also AMGN.
Well, yeah, that's the one that had the merger,
Yeah, so also bounced up. Didn't trade that, but mostly what I like to do, again, this time of the year, I will trade mostly the ETFs or big names like Tesla and Chinese companies.
There seems to be a pretty good bid on XBI, which is the biotech. You want to throw that up and see if you see anything happening there? Because that popped up on my screen as doing pretty good today. XBI, X-ray, Bobby, India. Yeah, it looks like something's going on there, maybe, huh?
That's it. So what I usually would look for, obviously start with a 4H, a 1H, just to find the levels, just to mark the support resistance level area, to see the ATR of the stock, and then go through the news, watching the news, see if there are big news or can really move the stock. Then try to look for the patterns inside of the 1 minute chart. Marna, mRNA, Moderna, was a crazy sell-off today. There were a couple of things that got it to move down, and basically there was a perfect pullback. Went down, pulled back, reached the 172 area, and from that point just dropping down. So a lot of those kind of moves.
Yeah, so your screener seems to be doing a pretty good job. Let's turn over to Casey. And Casey, anything fundamental or technical or any specific things you're looking at that you want to share?
Sure. I could bring back up a chart here. You want
Yeah,
me to do
sure.
that?
Yeah, sharing your chart is a good idea because it gives us a visual while you're speaking. You know,
Well, I'm so good with words that
That's true.
I
You're
can
a
paint
wordsmith.
picture. I can paint a picture with my words.
Storyteller.
Not really. Okay. Let's see. Make sure it's working. Okay. You guys see that?
Sure.
Oh,
Perfect.
Wait. You can?
Trend
Okay.
spider. Yep.
Okay. Yeah. All right. Great. So, wait, I lost it. Okay. Sorry. So what I'm looking at, this is the S&P 500. I like to draw some channels and look at higher time frames and drill down. And so what I've been looking at right here is that we have a nice trend line happening on the weekly. Okay. And so I like that. That's a nice little trend line. And price went right up into it and we started to drop. And then last week was a very nice reversal candle and it didn't quite go below. Like I like to see price break below the previous candle and it did. It went right below the previous week. There's still quite a bit of what we call support right here, and it's sitting on top of the 10 moving average. So right now, I think it's just waiting for news to make a decision, but it's kind of just sitting there. And so then I like to go down to a daily time frame to kind of get my bearings. And you can see that we've stalled out here, and now we're below this 10 period moving average. And so when I get it and it stays below there and it comes back up to retest, I like to see that it will then push off of that and then break these lows. So what I'm kind of looking for right now for an entry on this is for it to break one of these previous day lows. I primarily use my trend channels and my 10 moving average to come up with my trades, but then I also look at the RSI and the MACD just to kind of give me a visual picture. And so we see the MACD starting to roll over. The RSI just crossed below the 50s, kind of hanging around the 50 there. So that's what I'm looking for, and that's kind of how I trade. And so if I could also share one of the other ones that I was looking at, which is gold. And so I
You
use
get
the
some
same.
get some great comments out of Citigroup, and the guy at Citigroup was the guy who said oil was going to go down to 70 when it was at 120.
Okay.
And he's now saying that the gold has quite a bit of potential for next year. So are you kind of seeing the same thing? Because it is having a good pullback today, and it seems like it has some problems up around 1820. But how do you feel about this gold? Because it's on your radar too. Hey, there's a puppy.
Yeah, that's actually a random puppy. I had to switch my screen there for just 1 second because
All right.
I lost the chart. Hold on. I'm so sorry. Okay, where's the screen share button?
I thought it was one of the attendees. I didn't know.
Yeah, no, that's actually my screen. And it's beautiful. It's a beautiful little.
So you're going to show us something how you feel about the gold?
Yeah, I'm trying to bring it back.
Yeah, sure. Bring it back.
If I can figure out where.
If you have any trouble, maybe David could put up his chart and you can give him a
David,
symbol.
why don't you bring it up and then I'll try to figure it out here. Apologize for the live technical difficulties.
Yeah, no big deal.
Yeah.
And what's a symbol you want to use? Oh, he's got gold up there like that.
Just wanting to talk about gold or
Mhm.
something else related to that?
Did you want to do XAU or?
Yeah, that's gold is fine. Jim, was your question about the about oil or gold?
No. I was mentioning that one of the head analysts at Citigroup was very sharp on the oil drop, and now he's said he's optimistic on gold for next year. And I was wondering, I know you were talking about it. You kind of concur with that, or what are you thinking?
Oh, okay. Well, yes, absolutely. I do agree with that because we broke some very important levels. If we look at the chart right now, there's a big, strong triple bottom right off of the right above the 116 or the 1600 level. I like that. I think that's pretty strong. And then when I'm looking at that big blue EMA, broke pretty strong above that. And so then when I'm looking at a weekly time frame as well, I like to I like to look for breakouts and things above like the 50 period moving average on the weekly time frame. And so it's made a pretty nice break on the weekly time frame as well. And so I'm pretty bullish for that. And also with your comments on gold being positive, if we start to see the dollar hit the highs, which I think is what we have, right? And if the dollar continues to weaken, I think that we're going to see gold have a great year. So that's my overall take on it. But right now, we are moving down. The last day we're down. And I think right where you see that 200 EMA, I think we might see some resistance down there. And again, it really, a lot of it has to do with what happens this week, but I think that that's a good base of support around that 1730 area.
Yeah, and the RSI looks a little divergency there and coming down through the 60 number. So you might get a correction here, huh?
Yeah.
Yeah. Okay. And Dan, with regards to the options and what you're seeing there, I had a question for you. The VIX I see gapped up today. And I also see it has a gap from down when it was at 19. I'm looking at a 10-day chart on the VIX. And I see there was a gap between 19 and 20. And I see there's a gap between 23 and 24. And what's your gut feeling on that? Because, you know, with those kind of gaps, it could be a situation where the number comes out really positive for stocks and we have a huge rally. And then the VIX would fill in the 23, and it might even fill in the 20 to 19 if the rally starts breaking above 4,000. So what do you think the VIX might be telling us here? What's your gut on it?
Yeah, several things going on here. The VIX has been very, very interesting to watch lately. One, geez, I don't know, caveat, I guess I want to say, is because VIX is sort of a derivative of a derivative, maybe even of a derivative. I have to think more about that one.
I'm getting a headache with all those derivatives you're talking about.
Exactly.
I think I'm following. I think I'm following you. You know.
Right. So I don't look technically at charts of VIX and use it like I would with a typical asset. You know.
Okay.
Because, you know, it's just a little bit of a different animal. But, you know, that said, when VIX got down below 20, what was that, a week and a half ago or something like that?
Right. Last Monday, I guess.
Yeah. I mean, you know, you just look at it and realizing that, look, the small changes to inflation that have occurred, the small changes to the employment situation, the economy, were so not relevant that the VIX being down below 20 just seemed kind of absurd. And so I bought some I bought straddles then. And that was a week ago today is when I bought them.
Mm-hmm.
And as of this morning, you know, the VIX is up quite a bit. And I ended up getting, there's a little bit of an ironic play, but I think it's an interesting one. I ended up getting out of the straddle today because, you know, the spiders moved a little bit lower. And so I ended up with a little bit of a unwanted delta, you know, going into the number.
Right.
So counterintuitively, I want to be out of straddles with the VIX higher going into the number on Wednesday.
Mm-hmm.
But I feel that with a little bit of nimbleness following the number, when volatility gets crushed, I don't even want to say if. I mean, it's gonna come off at least a couple of points, I think.
Right.
I think that provides.
So you're thinking the VIX will come down and fill the gap at least at 23, and you know under a very stampede environment, it could even go down towards 19 or 20, or you think that's a little bit of a stretch?
Yeah, you always have this inverse relationship between equities and volatility.
Right.
So, if the market does end up going higher following the meeting, then I think volatility it could fall. It could even fall below 20. Though I think if we get a sell-off from anything that Powell has to say afterwards, we'd probably be above 20, but lower than here. And I just think either way, it ends up being a nice, 4-week, 5-week straddle play.
Yeah. Yeah. When you do these straddles, do you ever roll them? In other words, like say I'm looking at the VIX when it went down to 19 and I did a 20 straddle and now we're back up towards 25. Would you ever dump the 20 straddle and roll it up to a 25 straddle and then see how that neighborhood works?
Yeah. Well, by the way, when I'm talking straddles, I'm specifically talking S&P 500 straddles.
Oh, okay. Okay.
Just basically using the VIX as what it is, the implied volatility of that,
Yeah.
So yeah. Like I had that moment this morning when I was thinking about that. I was long the 399 straddle in spiders.
Right.
And I thought, I could just kind of roll it down to get closer to delta neutral, but I'd be basically scalping some Vega out of the straddles that I had, but then buying a straddle at a higher level. And I don't think I want to buy volatility here. I'd rather wait.
Yeah. I see a gap on a 10-day graph on the spider between 404 and 406 ballpark.
Mm-hmm.
I wonder if we got a good report, if that might be a tractor, And a good report meaning, he comes out and talks dovish. He talks about how we're making big progress. We got more to go, but we're going to go real slow, that kind of stuff. You know what I mean?
Yeah. To me, it just seems like it becomes a new game immediately following the number and going into Powell's talk.
And the holiday liquidity is probably an issue, and the algorithms, how they just jam. In other words, if it comes out to be a positive number, meaning he's dovish, et cetera, and there's a stampede of buying in a holiday environment.
Mm-hmm.
I mean, these guys on the other side of the trade, because you used to work at the floor, they're just going to stand back and let these people bid it up to the moon before they start stepping in front of it, right?
Yeah, I think that's a possibility. And actually, there are a couple of things that you mentioned earlier that I think kind of come into play. One is, the Santa Claus rally. It doesn't always happen. It happens about maybe 3/4 of the time, right?
Right.
So I think if we get some more hawkish statements, which I think it'll be tempered hawkish statements if we get them, but it could be. That could put the kibosh on it. And I don't know, I'm a trader. Options is my specialty. I'm not an economist, but obviously, you have to know a bit about macro to do what we all do here. But I just feel that maybe the Fed's looking at it a little bit incorrectly and handling it in a more traditional manner where I think inflation is being more driven by supply chain issues, and you can raise interest rates as much as you want. That's not going to fix that problem.
Yeah. But you would wonder how getting a market to go through the roof, it would be in line with their goals of stopping demand.
Yeah. And that plays into like one of the things that I'm looking at now is for my longer term investments, because I think of myself as both a trader and an investor.
Mm-hmm.
For my longer term investments, I'm looking at this as a really, really nice potential opportunity to write some calls on some of the long stocks that I have, because the going through the roof scenario is just the least likely scenario.
Hey, Casey, with regards to international markets, do you do anything with those? Because I caught a very nice rally in China and also in some of these other ones like Mexico and Australia, Canada. They all went up, India. But they all, might be stalling here because, opening up everybody out of their apartments without the proper hospital ICUs, nurses, and vaccines, they probably could be dangerous. So how do you do anything with the international markets?
My primary interest in international markets is through currencies, and I do a lot of currency trading. And so I will look at individual countries based off their currency. I don't look too much at individual stocks or funds or anything like that. And a lot of them are really they're really they're influenced by what's going on with the dollar. The dollar kind of rules the day, and so whatever you see happening with the dollar, it impacts them really heavily.
Yeah, you don't have to be a genius why you'd make a hit on foreign investments when it goes from 115 to 104. But is that party possibly over if we can't take out that 104 and we start going 106, 107, or what do you think?
Yeah, I think so. I think right now this pullback is pretty significant, and that's why when I was talking about gold earlier, when we see that gold's had a big spike in the last month or so, we can see that the reverse has happened on the dollar, and fundamentally, I think that if the inflation cools off, we're going to see the dollar continue to drop as well. And so they're trying really hard to make that happen. So I think that's what's going to happen. So I think last year, or this current year, 2022, was a great year for the dollar, the year of the dollar. I think 2023 is not going to be the year of the dollar. I think we're going to see pretty heavy pullback in 2023 for the dollar.
Yeah. And maybe it's in line with that most of the interest rate hikes have been done. And so that genie's out of the bottle. And then basically, if they do get a slowdown because of the lag effects of what they've done on the interest rates, and you did get the earnings to drop, of course, that might not be positive for the dollar either, huh?
Right. Yeah. And then we start to, so that's a great point. And just like everything else, you get these commodities that do really well. They go through extremely strong cycles, and then when you think that it's going to keep going, then it has a reverse, and the reverse is usually pretty strong as well.
Yeah. And maybe those central bankers got the idea that dollar was getting so strong that we could have had a systemic problem in some of these developing market currencies and stuff like that, huh?
That's very true. And when the dollar gets too strong, it does create a problem for a lot of the countries of the world, and even with American companies that are trying to do business overseas, it can cause some issues as well.
Yeah.
Definitely is good in some cases if you're doing things with the dollar and you're trying to do any kind of activities overseas. It's always really beneficial to have a strong dollar.
Another good point about being somewhat concerned about the dollar is it's in the RSI neighborhood where the underlying market is generally weak. The RSI is pretty substantially under 50.
Right, and it's been hanging under there. Every time you see the pullback, these pullbacks they've been weak recently. So I think the 107 level is going to be pretty hard for them to get over.
Michael, you generally do most of the short-term trading, and but do you have any? Because I know you're watching the landscape going into 2023. Do you have any really dramatic things you expect that we might see that people could focus on? Either either in stocks or commodities or interest rates or currencies, in any of the markets?
Yeah, so basically the way that I look at the other markets are through the glasses of the stocks, the US stocks. So for example, if I'm looking at the Chinese market, I usually will trade or analyze the BABA and Bili and Baidu and all of those.
Mm-hmm.
All of those Chinese companies, just to
JD.
get a reflection. Yeah, exactly. TAL, just to get a reflection from the Chinese market. But other than that, as you said, I'm mostly just a short-term, hardcore short-term trader. So my big vision is just to analyze for the next week or so, and then just execute my trades.
Did you get any sell signals on the Chinese stocks? Because again, it went from we're changing our whole policy, and we're going to get rid of zero COVID, and now there's a little bit of stuff where the infections are going through the roof, and there's real problems with helping these people, and so the minister's comparing it to the common cold now to try to quell concerns. But what are you thinking here? Is this rally possibly over for now, as far as your short-term stuff?
I mean, they went down like crazy. Let's say if you're looking at the BABA, Alibaba, it went down from 319 all the way to 60.
Yeah.
Right. So, and this is a big company, BABA, Alibaba. It's a huge company. So at the end, looking like a decent price, around the 60s, the 80s, looking like a decent price and a lot of upside to it. If it will break through the 200, I got the 200 EMA on my chart at around 97, around $97. I'm looking at the daily chart. Yeah. So I guess if we already got one-time resistance from it. So I guess if we will break through the $100, then we can see a nice move to the upside, even, like 30, 40 points all the way to, like 130, 140, trying to close the gap. There's a gap from November 21.
But these are longer term charts. If you're doing very short term trading, wouldn't you be short BABA right now?
For the short term,
I mean, that's what you do, right? You do the 1 day stuff and 3 day stuff.
So I wouldn't look at it that way. I'm just waiting to see a strong momentum move or a strong volume coming in on any particular day, and then I'll short it. So I'm looking at BABA at the moment. Let's say if it will break something around the $85, then I will start thinking of getting into a short position, maybe pushing to close the gap at around, getting into the gap around 82, and then closing
I see.
around
Those gaps underneath might get filled, right?
Yeah. So, but it's only if I'll see a strong momentum move in a specific day. So I
think I'm getting it now. Basically, we may have hit a high on it, but you don't want to be the first guy on the sell side. You'll let the thing start topping out a little bit and then take out something like 85. So now the momentum to the downside is picking up. And that would be more interesting you to do some selling once we have an established high point and then some better momentum, right?
Exactly. Yeah. It's all about, when you're day trading, it's all about the momentum at the end. You're just looking for the levels, either a support level or resistance level to break or break through in order to start seeing the momentum coming in and then jump in on that trade. If you want to zoom in, let's say on a 1H, 1H chart, like a 1 hour
hourly,
chart.
1 hourly,
so,
hourly chart.
So for example, if we don't want to wait, perfect. So if we don't want to wait all the way to the 85, we can look at around 87, around the $87. Let's say if it will break it, retest it, the $87, and then from that point, we can start looking to short it, probably all the way to at least the 85, and then maybe even filling up the gap, getting into the gap around 82 and then closing it at around 80.
Yeah, there are probably some great trading opportunities with this stuff, don't you think, Michael? Because they are expecting a bumpy opening, and then basically in the second half of next year, they might be on track. And obviously in the second half, the weather will be warmer. So maybe the infections obviously logically might be a lot less. And so it could be a lot of back and forth, up and down in the beginning of the year. And those would give you good trading opportunities maybe, huh?
Yeah, and it's not just the COVID, it's also the other stuff, political stuff.
Yeah.
Regarding the prime minister or generally the government,
right,
and the way they will handle things.
Yeah, they got unemployment problems for their youth, and they also obviously have real estate problems that aren't going away either. So there's a lot of balls in the air over there, right?
Yeah. Generally speaking, the chart on hourly chart looks pretty good to the downside.
Dan, going into 2023, is there any market that you think might have some pretty big potential?
I mean, my main focus is trading the options on typically U.S. equities. I mean, I will do some ADRs and such. And so, like I look at the things that Michael and Casey talk about and have expertise in. I look at them more for fundamental information and to get a better picture to be able to do what I do better as far as trading the U.S. equity. So I guess I can talk a little bit more to that, specifically in terms of volatility. This VIX picture, I'm just going to call it here, maybe even for the entire 2023. I'm looking at a floor of 20 on the VIX for all of next year. Now, like, people will say that the long-term average for the VIX is, well, they'll say it's like 16. Some people say it's 20, but that like takes into account like massive spikes when it goes up to 70 or something like that.
Right.
But I
aberrations.
Yeah, exactly. Right. But I mean, I guess that's really, if I have to give some good solid guidance to our listeners here, this new volatility regime is the volatility regime that we're going to be in for a while. And, frankly, that's probably why we've been seeing such high option volumes. I think there were 3 months this year that we set a record in option volume, if I'm not mistaken.
Mm-hmm.
Because it is an option trader's market.
Mm-hmm. Yeah, I mean, look at that VIX. You had opportunities this year, both on puts and calls, huge in January to March, the first quarter and the second quarter and the third quarter. And now we're into the fourth quarter. And so each quarter has given you up and down potential that is very significant on the VIX. Right now you would maybe say, if you're looking at the graph, that it came down to fill a gap, which it did around that 20 mark, which is in August. And now, if they really do hike, and if they really do kill the demand, and if earnings really do roll over, then maybe it is on the path to matriculate back towards the 30 or 35 in the first quarter.
Yeah. I mean,
which would be in line with that testing the 3,500, right?
Yeah. And this ties into what Michael was just talking about, about China. I mean, they're kind of now in a situation where they're damned if they do, damned if they don't.
Yeah.
Because, China's where stuff is made. And that's where the world buys stuff from. And if they have supply chain issues because they're making people stay in their apartments, then, that messes up the rest of the world and causes inflation in the rest of the world. But then if they just open the doors and everybody's sick, that still causes supply chain issues.
Yeah, exactly. Because everyone in the ICU is not going to help production, right?
Yeah. So I mean, we're in a period of we're going to get some better news that, hey, maybe inflation's coming down a little bit. Maybe jobs are slowing down, which unfortunately is kind of the goal of raising interest rates. But we're going to get that bad news too. We're just going to be in this cycle for a good another year, I think.
Yeah. Okay, well, we're coming into the last 10 minutes here. I thought it would be a good time for spending a little bit of time on what you guys actually do to help people, and so that people are listening can contact you and obviously get some help. So Casey, with Trading Strategies, just go into a little bit about, what are you doing for people and exactly when they call, if you have any special offers or ways you're going to help them.
So my website's tradingstrategyguides.com. And we have a lot of free education on how to trade, how to read charts, how to find trading strategies for all markets. And I also host a podcast on the same page called How to Trade It, and I interview some of the best traders, and they share their insight. And so it's a two-part thing. We have education on the site for getting a lot of free trading education and free trading strategies, and also the podcast where we interview some of the best traders. So feel free to check that out if you want to learn something specific about trading. We got lots of great content over there.
And no matter what level trader you are, a new trader, intermediate type trader, or an advanced trader, everyone can get some good information there.
Yeah, no matter where you're at. And me, I've been doing this for a long time, and I'm still trying to always learn. I'm always reading and studying and trying to up my game a little bit.
Yeah. That's great. Michael, again, you want to explain a little bit about how people can benefit by contacting you? And then if you have any special offers or anything, you can cover them and we can see what's going on there.
Yeah, thanks. So as I mentioned before, we are a prop firm, an online prop firm. And what we do is basically give anyone, stock trader, any stock day trader, the ability to trade and join our prop fund. So basically, he will go or she will go through an evaluation phase. And if he passes it or she and reach the goal and didn't reach his maximum drawdown and stuff like that, he will get funded and basically trade on our capital. Now, especially as a day trader, especially in the US, you need at least 25K to open an account, right? And to trade, to day trade stocks. So in this case, you're trading our capital. The valuation phase is as little as $300. So you go through that, passes it, and start trading with us. We provide a lot of tools, technical tools, and also mental tools, anything basically from blogs, from playbooks, ebooks, anything that we can donate or give in order to promote our traders. And if you want to check it out at tradeapool.com, we also have a Christmas sale going on. So feel free.
And what type of, what's the profile of some people that are doing this? Is it young? Is it old? Is it retired? Is it employed, unemployed? What is the kind of profile?
I mean, we have everyone because at the end of the day, there are tons of people who want to trade the market and don't have the ability to do so, especially when you need the nice capital, nice deposit in the broker account in order to really be active. But we have everyone from guys in their 20s and also 60 and 70s.
And when people go to your website, they'll get all the details on how that works, what expenses, if any, there are, and again, your thresholds that you have to meet in order to get funded and all those type of, because there's quite a bit of details that you can't go over in this small format, right?
Yeah, but you can go ahead and check it out. Of course, if you have any questions, there is FAQs, and we have a chat bot, and of course, the support. You can call us to the office as well. But all the details are there. You need to, at the end of the day, we have set of rules. You need to reach X amount of money and not reaching maximum drawdown. If you stand with those rules, you get funded.
Sure. Okay, Dan, you've got tremendous experience as a trader down there on the floor. And then, of course, you've been following these markets for decades. And you obviously follow all the news out there and create opinions. But you have some kind of specialties in the options you kind of focus on. So can you let people know, how you bring these things to the table for people and, how they can benefit by contacting you?
Yeah, we have a few systems that we really dialed in, worked really hard on over the past couple of years. And when the market changes, some of these become more important for our flock of traders than they have been. And right now, I mentioned covered calls. Getting those on before the announcement on Wednesday, I think is really important. And, you know, covered calls are simple, but they're trickier than most people give them credit for. So we actually have a webinar tomorrow night on our system for trading covered calls and cash secured puts. And folks can join us by just going to markettaker.com/REG, like for register. So that's market, like stock market, taker, take what's rightfully yours, 2 T's in a row, /REG. And it's a complimentary webinar. It introduces our system. And, you know, I just think it's a really important time to have that class.
Yeah, no doubt, because I mean, this VIX has come down from 35 down to 19, and it is spiking. I would call it spiking up a little bit today, almost up 10%. And so that might either be telling us that things are going to get very, very volatile to the downside, or, you know, sometimes these things gap up and then they can't hold their water and they come right back down. So the idea that there's going to be big volatility by the end of the week is probably not far-fetched, huh?
Yeah, absolutely.
Yeah, so we'll have to see. All right, you guys, as far as optionprofessor.com is concerned, you know, we do have PDF reports on options that we send out, and also a one-on-one review of trading strategies you're doing and ideas that we have. And we do some sharing in that one-on-one online review, which is helpful. So that's at optionprofessor.com. Check that out. Guys, hope you guys have a great holiday season. And of course, we'll be doing this more in 2023. But thanks a lot for being here. And everybody should take advantage of contacting these guys and try to take advantage of the services they have. Right now, I'm going to switch it back over to David. And thanks for being here, guys. And again, happy holidays.
Thanks so much.
Thanks.
Thanks so much. Yeah.
All right. Thanks, guys. Yeah, just a lot of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. And you can also just go to timingresearch.com to get access to any of the past shows or presentations. Also, Timing Research is now available on Substack. So if you are already you know, especially if you're already a Substack subscriber, you can just look up Timing Research and get the updates on new episodes that way as well. So I just want to thank my lineup again for today. Michael Katz, first time being here on the Monday CFN show. He's done some great presentations on previous Synergy Trader events, but I want to thank him for being here on
Thanks, David.
Crowd Forecast News. So Michael Katz of TradeThePool.com. And also Casey Stubbs of TradingStrategyGuides.com. Thank you to him for being back. And Dan Passarelli of MarketTaker.com. And moderator, the Option Professor of OptionProfessor.com. Thanks, everyone.
Thanks so much, David. Appreciate it.